What's one thing investors are always trying to prove in their properties? Their cash flow. Well, if this is what you're looking for, then this video is for you. We're gonna show you 5 different strategies that you can use to increase your cash flow, decrease your costs, and it's all gonna start right after this. Hi everyone, I'm Josh Tavares, real estate agent with eXp Realty covering the Greater Toronto area. It would mean so much if you can help us out and hit the like button, hit the subscribe button, and jiggle the notification bell to get updates on our newly uploaded content. And if you want access to our seller's guide, comment seller's guide down below and I'll give you access to that. And it's all gonna begin right now. Number 1, rental increases. Now you may be thinking, if I increase my rents, then I'll be able to have more cash flow in my properties, which is very true. However, especially for tenants that have vacated the property and you're able to get new tenants into the property, you want to do your market research and make sure that not only you have market value, but you have a property in a great condition that is going to attract top level tenants. Now, if you have existing tenants in the property, I caution you to look into the laws in terms of what are the rental rate increases in your landlord tenant board in your region or county, state, province, whatever it may be, because there can be some serious fines if you are going to overcharge your tenants. So something to seriously be minded of. Now, for those who have existing tenants, you may be thinking, oh, my great tenants will leave then. And that could be the case. However, with the cost of homeownership substantially increasing, it's making it a lot harder for those who may only be able to rent to get into the housing market. And remember, as an investor, this is a business. You have to operate as a business, and any opportunity that you can to up the rents or generate additional income is worth looking into. Now, by missing out on the opportunity to raise rents, you're missing out on income that you may not be able to increase down the road if those tenants stick around. Now, what I'm saying is, let's just say you've owned a property for about 5 so years and you've never raised the rents. You cannot, in most places, increase the rent 5 years worth of increases just because you feel like so. You're only able to do so every year that you're allowed to do through allowance of the landlord tenant board of the region that you're in. So something to be super mindful. And that could lead to hundreds, if not maybe thousands of dollars down the road in equity ownership, cash flow, and so on and so forth that you're missing out on. So it's something worth looking into. Number 2, add amenities and upgrades. Now, for amenity upgrades on the property, you might want to do some research and find out what the market is going for providing additional value for your tenants to live on your property. And one thing in terms of for turnover rate is probably a better idea to get things like laminate flooring, which is better than carpet, so you can save out on the cost of cleaning when tenants leave. And also looking for amenities that provide tons of value, that are providing top dollar for great tenants in the future, are great investments that'll help you and your rental properties. Now, some value adds you can add to your property to find better quality tenants, increase your rent, are things like high-speed internet, a balcony, patio, dishwasher, things that tenants are looking for their lifestyle. Now, for some additional values that you can provide to your properties, especially in neighborhoods that may be a little bit more in the gentrification phase side, is provide some safety measures. So some security systems that, of course, your tenants are fully aware there is on site in the event that there is perhaps any high break-ins into the neighborhood, as well as keyless entries, and always changing the locks of all your units in the event that tenants decide to leave. So there's of course no opportunity for someone to go into your property who at one point rented there. So be able to provide that level of safety and security that's going to help you with costs down the road and help with finding great tenants that feel safe in your home. Number 3, create additional revenue sources. Now, some revenue generating opportunities, depending on the property type, can be a vending machine, coin operated laundry, a shed, even if there's parking on site. Now, depending on the market in your area, you may be able to charge additional for parking, depending of course on the demand and whatnot. So it's something to definitely look into as well. Also, things like storage, a wine cellar for particular high-end luxury properties, things as such that, depending on the lifestyle, provides value to these potential tenants that will increase the rental generated in the property and help provide additional forms of income for your property. Another great idea, of course, given the funds and whatnot, is to have an additional dwelling unit provided on site. So this could be an example, having the top level of the 3-story home that you may be using just for storage, be able to convert that into a dwelling unit, having the plumbing, electrical, all the different fixtures needed for living. Also, you can go about using your garage if need be and be able to have all the living fixtures, the plumbing, the electrical, and everything needed, and be able to generate additional rents. So you can go about having an additional unit and increase the rents and overall build the wealth generating component within the property. Number 4, decrease your rental operating expenses. Making an improvement to the property that not only increases the appeal but decreases your costs is a super strategic approach for your property. I recommend getting things like a high efficiency furnace, high efficiency toilets, LED lights, anything as such that is going to increase the overall efficiency of your home, decrease costs for things like electrical, water, gas, anything of that sort. If you have any old electrical based appliances that can be converted into gas, you'll substantially save. One of our rental properties last year, we were able to invest, and I will tell you that we were able to save over $100 a month, which ends up being $1,200 a year just from efficiencies, not including the increase of rent that we were obtaining, and that's substantial for our portfolio. Another idea to decrease your operating expenses is essentially you can convert the grass patch that you have in the front of your home, if no one's essentially using it, and convert that into stone. So not only do you not have to pay for lawn care in the event that you're paying for a contractor to do that because they're close to the property and makes more financial sense, but also you can actually use that to generate additional income potentially with having perhaps cars park on site and have additional parking. Another way to decrease your net operating expenses is when new tenants come onto the property, be able to, of course, depending on the property type, if it's able to do so with separate meters and jurisdiction, go about and charging the utilities over to your tenants. Like with one of our properties, we're able, because it's separate meter for electrical, we charge electricity over to our tenants, so we're able to save over $150 every single month. Now, when doing this, you may have to drop your rent a little bit, perhaps $25 to $50 a month, but in the long run, some of these utilities can cost a substantial amount, especially in months that consume a higher volume. So something to definitely look into. And number 5, refinance your property. With this one, I recommend speaking to a finance specialist and look at what's the best option for you given how the market is performing. Now, in the event that, let's just say you have an interest rate of about 5% in your region from when you signed the mortgage, right? And now it's about 2%. You could be saving about 3%, which is substantial in terms of payments, and be able to pay less interest, pay down more principal, right? And be able to have more money in your pocket. So it's something to really look into and speak to a qualified professional in the finance space. Now, with rates being lower than before, it's a great idea to lower your costs and have more cash flow in your pocket, which you could use to pay down any existing debt on your properties. Also, with the refinance, not only can you get better lending terms, you could also use the refinance as the ability, depending on the equity, to acquire another rental property. So it's a wonderful way to decrease your costs and also use that to purchase another rental property that will pay for that financing needed to acquire the additional property. Like I said earlier, it's super important to work with someone who is a professional in this space so they can give you the best options and be able to look at what the amortization and the amount that you could be saving and have more cash flow, that you're able to own the property outright even sooner than, of course, having higher interest rates that will definitely impact your portfolio going forward. I hope this video was super helpful, insightful, and gives you strategies that you can use today to help decrease the cost and have more cash flow in your property. Remember to follow us on all of our Tavares Rajasingam accounts, and it would mean so much if you can help us out. Hit the like button, hit the subscribe button, and hit the notification bell to get updates on our newly uploaded content. And if you want to know our top 5 real estate investing strategies here in Ontario, click the card above. And thanks so much for watching, everyone. We really appreciate it. I'm Josh Tavares, real estate agent with eXp Realty, covering the Greater Toronto Area. Take care.